Hi, well, NVIDIA beating on the top and bottom line. The company reporting adjusted earnings of $1.32 per share. That is 10 cents better than estimates. Revenues of $7.64 billion, exceeding estimates of $7.42 billion. And the company's first quarter guidance is also coming in better than expected at $8.1 billion versus the $7.3 billion estimated. The company CEO Jensen Huang saying we are seeing exceptional demand for NVIDIA computing platforms, going on to say we are entering the new year with strong momentum across our businesses and excellent traction with our new software business models with NVIDIA AI, NVIDIA Omniverse, and NVIDIA Drive. And they say we will announce many new products, applications, and partners for NVIDIA computing. Guys, back over to you. See, the stock is trading pretty much flat.
All right, Patrick. We got the bet out of debt. So you just saw what I just saw. NVIDIA killed it maybe just a little over a week ago. They reported earnings. Today's show, we're going to compare NVIDIA to AMD, but we'll start out with NVIDIA because we did AMD back on February the 6th. So today, without further ado, is NVIDIA. How are you feeling today, Mr. Doherty?
Yeah, feeling good. Happy Sunday. Happy Sunday.
What do you think of what you just heard, my friend?
Well, NVIDIA is continuing to perform phenomenally, not just in the gaming sector, but also in the AI data centering. Little light on the EV, but but in the core businesses, NVIDIA is once again just producing phenomenal results. It can't be touched.
Yeah, we're going to show some videos and some excerpts from the conference call shortly.
Yes.
And we talked about NVIDIA when we did the AMD review a few weeks ago, back on February the 6th. And at the end of that, our consensus was NVIDIA with a premium. But let's see if our consensus is the same today. Okay?
Sure.
All right, so let me show an analyst, a guy named Gill. He is an analyst that follows NVIDIA, and he's going to give an assessment on how he interpreted NVIDIA earnings. So let's check that out.
This report.
I looked at the numbers. The numbers look great. There was a significant beat and raise quarter. For the guide for April, they're coming in at $8.1 billion. The street was $7.3 billion, so almost $800 million above the street. If you look at the segments, the gaming business grew 61% year over year. That represents about 58% of revenue. And their compute networking, or the data center business, grew 60% as well. And this is after growing 50% the prior year. So the last 2 years for NVIDIA, it's been growing over 100%. And this is almost all entirely organically. There's been no kind of meaningful acquisitions whatsoever. And the company is generating significant amount of free cash flow, generating about $9 billion of free cash flow, has an operating margin of 47%. So the financials are as good as you can get. And the TAMs that NVIDIA is addressing are massive. So in the hardware TAM, there's about $100 billion TAM available. And then with the Omniverse opportunity, that's another $100 billion TAM. So TAMs are quite big for NVIDIA.
All right, Patrick, what did we hear there, my friend?
He was basically saying the same thing I just kind of summarized, that all of NVIDIA's businesses are doing really well. I mean, 50%, 60% type of growth in each of these segments. It's Jensen Huang is on fire.
Yeah, he's killing it, and he talked about TAM. And we are an investment show for newer investors. So TAM is an acronym for total addressable market. Is how much business is out there for NVIDIA to get. So there seems to be a large future runway for NVIDIA to do well. So I thought that was pretty impressive. So let's go to the next one. One of the reasons why NVIDIA is down is because people believe that the chip shortage is supply chain constraint because of COVID. And everyone knows that a lot of companies are not meeting their numbers because they can't get their chip because of supply chain constraints. So let's hear what this analyst, Raj, had to say about his analysis of NVIDIA supply chain. So check this out.
What about on the supply side? Are the risks there now behind them, or is that still a concern for the rest of this year?
The risk is less of a concern. They have made close to $3 to $4 billion worth of prepayments from their foundry partners to their foundry partners, TSMC as well as Samsung. They will be getting more supply in the second half of this year to support the surge in gaming. That's where most of the constraints have been on their new gaming chips. So capacity will be coming online. NVIDIA is an extremely important customer for TSMC as well as for Samsung. So I think the capacity conditions will start to ease in the second half.
And if you believe him, Patrick, you can make a lot of money down here on NVIDIA. And there was a key thing that he said about the capacity constraints. He said it was mostly in gaming. But do you know, Patrick, where NVIDIA is scheduled to grow the most? Is it gaming? Is it gaming?
No, it's not.
It's not. It's data center. So,
Yes.
so data center is the biggest growth outlook, TAM, total addressable market. But gaming is a big part. But if you believe what Raj is saying, which I kind of believe, and when we go into conference call, Jensen, the CEO, will talk about it. I think there's some room there. I think they're addressing their supply chain similar to how AMD is. And AMD CEO Lisa Su was saying something similar. You know what I'm saying, Patrick?
Yes, that they're going to be able to manage the supply chain issues and be proactive and get ahead of it. Actually,
So when we buy stocks in a company, we're buying growth. So this whole thesis is about buying growth. It's about buying revenue. A company increasing its revenue, which is a fancy word for sales, and a company increasing its earnings per share, which is a fancy word for profits per share. So that's what we're buying. And in these cases, analysts is projecting growth, and we'll let Jensen talk about the growth as well, and you can decide. So finally, let me get to this, Patrick. I want to show something here related to Raj, and he was answering a question related to somewhat of the growth thesis for NVIDIA. And check this out.
Just quickly, Raji, to round it off, would an economic slowdown hurt them, or are they immune to that?
An economic slowdown will hurt everyone. I do feel that they're less vulnerable than others because they're tied to massive secular trends that are happening in technology. One of which is the adoption of artificial intelligence and machine learning across industries, across hyperscalers, across enterprises. That's not slowing down. The need to process different types of data, whether it's natural language processing or video or images, that will continue. The consumer side is tied to gaming, demand for gaming. Gaming is also in a secular shift as well, and they have a huge installed base. So there will be some impact in terms of the consumer spending, but the secular trends, both in gaming and data center, are very strong.
So even with the slowdown, Patrick, what did you hear, my friend?
but I hear that the so-called secular trend, meaning that the trend that exists outside of the normal economic growth, is still very strong for NVIDIA's data centering and gaming, which are the core businesses of NVIDIA.
Yes, and he left out a couple other exciting areas for NVIDIA that we're going to get into, that Jensen Huang, the CEO of NVIDIA, is going to get into. That AI is huge for NVIDIA, and especially in the automotive space, AI is big, as well as software. Patrick, did you realize that NVIDIA has a burgeoning software business, licensing business?
Yeah, I understand because that's how you're able to increase your market share is by introducing software, and then you can introduce your hardware on top of that.
Yeah, so Jensen is going to talk about that a bit. So let's start to get into the earnings call a little bit of AMD, and I'm going to play the first one on the CEO of NVIDIA talking about the
Yes.
future of AI. So let's get a sense of what AI will look like in the future per NVIDIA CEO's vision. And when you hear AI, you hear an NVIDIA growth TAM. So check this out.
Um,
Uh-huh.
the applications for AI is unquestionably growing, and it's growing incredibly fast. Whether in enterprises and financial services, it could be fraud detection. In cases of consumer pointing businesses, customer service, conversational AI, what people are calling chatbots. But in the future, every website will have a chatbot. Every phone number will have a chatbot that whether it's a human in the loop or not human in the loop, will have a chatbot. And so customer service will be heavily supported by artificial intelligence in the future. Almost every point of sales, I think, whether it's a fast foods or quick service, businesses are going to have chatbots and AI-based customer service. Retail checkouts will be supported by AI agents, and so all of this is made possible by a couple of breakthroughs. Computer vision, of course, because the agents, the AIs have to make eye contact and recognize your posture and such, recognize speech, understand the context and what is being spoken about, and have a reasonable conversation with people so that you could provide good customer service. The ability to have human in the loop is one of the great things about an AI, much more so than a recording, which obviously is not intelligent, and therefore it's difficult to, if you will, call your manager or call somebody to provide services that the AI can't. And so the number of different applications that have been enabled by natural language understanding in customer service in just the last couple of years has grown tremendously. I think we remain early days in our in AI adoption. It's incredible how fast it's grown and how many different applications are now possible with AI. It pretty much says that almost all future software will be written with AI or by AI, and when it's done, it will be an AI. And we see it in all these different industries. And so I'm pretty certain we're in the early innings yet of AI, and this is going to be one of the largest industries of software that we have ever known. With respect to capital, we had, as you know, we had just terminated our ARM agreement. We have a regular capital strategy process, and we'll go through that, and we'll make the best judgment about how to use our capital in helping our growth and sustaining our growth and accelerating our growth, and we'll have all of those sensible conversations during those capital allocation meetings.
All right, Patrick. When we hear AI, who is the leader in the world in AI?
NVIDIA is.
Is that exciting or what?
Oh, it's the wave of the future. It's you know, there's nothing like it. Put it this way.
Yeah, and you will have to believe Jensen is speaking the truth, or he has it right. I wouldn't bet against Jensen. He's the owner and founder of NVIDIA, and he has grown that company from its infancy to where it is today. NVIDIA is projected to be the first trillion-dollar semiconductor company. So I tend to believe what he has to say there. So that is the TAM, total addressable market, AI, which is artificial intelligence. That's what AI is for those who may not be familiar with that. So exciting total addressable market for NVIDIA. Now, let's talk about ARM. And obviously, if you go to the earnings call for NVIDIA and listen to it, and I put a link in the chat so that people can find it. We did a show on that a while back, how to find an earnings call for any company. Obviously, Jensen is going in talking about the growth potential for NVIDIA, similar to what Lisa Su did for AMD. So, the same data center, the same, high projected growth and all of that. But there's one thing that NVIDIA had that was a disappointment, and that was the whole ARMS deal. And so what do you think, Patrick? I know you did not have an opportunity to hear the whole earnings call. What do you think Jensen had to say about ARM now that they didn't get the deal done? What do you think he had to say about that?
You'll probably say that, it's probably a disappointment that they weren't able to get the ARM deal, but they could work around the some of those issues that, not having the deal. They could probably pursue similar technologies. That's what I would think.
And do you think they're still working on an ARMS project? You think they're still working with ARMS, or now that they were not able to close the deal to buy them, do you think it all fell apart?
I don't think they're probably still working to some degree with ARM.
Well,
is what I think.
Well, check this out. They're working hugely with ARM. Check this out.
Hey, thank you. I wonder if you could talk a little bit more about Grace now that the strategy kind of separated from the acquisition of ARM. What are your aspirations there? Is it going to be primarily oriented to the DGX and EGX systems business versus merchant chips? Just how are you thinking about that opportunity long term?
Yeah, thanks, Joe. We have multiple ARM projects going in the company, from connected from devices to robotics processors, such as the new Orin that's going into autonomous vehicles and robotic systems and industrial automation robotics and such. Orin is doing incredibly well. It started production, and as we mentioned earlier, it's going to drive an inflection point starting in Q2, but accelerating through Q3 and the several years after, as we ramp into all of the electric cars and all of the robotic applications and robo-taxis and such. We also have ARM projects with the CPU that you mentioned, Grace. We have Grace, and we surely have the follow-ons to Grace, and you could expect us to do a lot of CPU developments around the ARM architecture. One of the things that's really developed nicely over the last couple of years is the success that ARM has seen in hyperscalers and data centers, and it's really accelerated and motivated them to accelerate the development of higher-end CPUs. And so you're going to see a lot of exciting CPUs coming from us, and Grace is just the first example. You're going to see a whole bunch of them beyond that. But our strategy is accelerated computing. That's ultimately what we do for a living. We as you know, love it where there's any CPUs. If it's an x86 from any vendor, so long as we have a CPU, we could connect NVIDIA's platform to it and accelerate it for artificial intelligence or computer graphics or robotics and such. And so we love to see the expansion of CPU footprints, and we're just thrilled that ARM is now growing into robotics and autonomous vehicles and cloud computing and supercomputing in all these different applications, and we intend to bring the full spectrum of NVIDIA's accelerated computing platform to.
All right, Patrick. Thoughts?
Yeah, so it sounds like they're doing a lot of these high end processing units with ARM, a computer chip called Grace. So, I mean, that should continue allowing NVIDIA to accelerate in all its business interests with the ARM processors or ARM oriented processors.
Yeah. And if those who are listening to this broadcast will go back and listen to the earnings call for NVIDIA, I mean, Jensen goes in on all of that. He provides a lot more details. I'm just providing some highlights. But yeah, hugely, and what's kind of different and new, a couple of things to consider. One, NVIDIA did not close the deal to buy ARM's holding, right? So that would have been a massive take if they were able to get that company. But there were some headwinds that NVIDIA would have had to face if they would have purchased ARM, because there was some conflict of interest type situations out there that some pundits believe that it was good. It was fortuitous that, NVIDIA did not get the ARM's deal. But just besides that, ARMS is usually in the embedded space, meaning the kind of dumber chips, not the smarter 5 nanometer newer technology chips. But what he was saying in that excerpt is that ARM is going towards more smart computing, smarter chips, later the latest technology, and that's right in the backyard, in the rim of NVIDIA. So NVIDIA has a lot of room for growth, a lot of TAM in that space. So they're going to continue to grow. And that's what we're buying when we're buying the stock. We're buying future growth. So the opportunities look really good there. And did you hear the Orin? Orin is the other chip for autonomous vehicles. So
Yes.
they're encroaching more and more into the autonomous vehicle space with smart chips, that being NVIDIA. So NVIDIA is just expanding into newer markets. And he mentioned something called a hyperscaler. Hyperscalers, they're just data centers just for really big companies like your Amazons, who, they do, what is it? AWS. They provide AWS service.
Yeah, AWS. Yeah, AWS
service for
services.
other companies. And then Facebook has massive servers, that take up like a 10,000 square foot building. Well, those big server type of situation are called hyperscaler servers. Most companies just have like a little computer server desktop thing for enterprise, but hyperscalers are like a big building for. So NVIDIA is, just killing that artificial intelligence for those type of data centers. So massive growth, massive prospects there for NVIDIA. I'm not sure if you want to say anything else before I go into the next one here, Patrick.
No, let's continue.
Okay, so listen to Jensen talk a little more about Orin, which is the AI for artificial intelligence for automotive cars. And that AI for automotive cars, that's the self-driving car business. And then he's going to talk a little more about the smart computer artificial intelligence for data center. So let me play that.
As mentioned, Orin ramping into autonomous vehicles is brand new. This is the inflection point of us growing into autonomous vehicles. This is going to be a very large business for us going forward. What it was already mentioned, Grace is a brand new product that has never been on NVIDIA's roadmap. And we already see great success with customers who love the architecture of it and desperately in need of the type of capability that Grace brings. And this should be a pretty exciting year for new product launches. And so we're preparing for all of that, laying the foundation for us to bring all those exciting products to the marketplace.
So yeah, I just wanted to provide some more insight on that. So new TAM, new business, growth, growth, growth. As investors, we love, 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 right, Patrick?
Exactly.
So one of the next to the last excerpts from NVIDIA's earnings call is NVIDIA. Listen to Jensen, CEO of NVIDIA, talk about licensing their software and the growth and potential there. Check this out, Patrick.
Software, and I think it's still kind of a little bit of a black box for a lot of investors. And I know, Jensen, that you've talked about software as a medium to basically open up new markets. But I'm wondering maybe if you can sort of quantify how big the software licensing revenue is today, and maybe when you might start to break it out like you did data center, which really got the stock moving in a huge, huge way. Thanks.
Yeah, NVIDIA is a software-driven business. Accelerated computing is a software-driven business. It starts from recognizing what domain of applications we want to accelerate and can accelerate, and then building an entire stack from the processor to the system software, the acceleration engines, and potentially even the applications itself, like the software that we were mentioning earlier, NVIDIA Drive, NVIDIA AI, and NVIDIA Omniverse. These are applications that sit on top of system software and are really valuable to the marketplace. The way to think about our software licensing, so we've always been a software-driven business, but for the very first time, we have packaged licensable software available to customers. The way that we license software for NVIDIA AI Enterprise is per node of server. There's some 25 million servers that are installed in the world today in enterprises, not including clouds. We believe that every single server in the future will be running AI software. And we would like to offer an engine that enables enterprises to be able to use the most advanced, the most trusted, the most utilized AI engine in the world. And so that is essentially the target market, if you will, for NVIDIA AI. The NVIDIA Omniverse is designed for creators contributing content to a virtual world and connected to robots that are contributing to content in a virtual world. And so it's based on connections. There are 40 million designers and creators around the world. There are going to be hundreds of millions of robots. Every single car will essentially be a robot someday. And those are connections that will be connected into a digital twin system like Omniverse. And those are, so the Omniverse business model is per connection per year. And in the case of NVIDIA Drive, we share the economics of the software that we deliver. And if it's AV software or parking software or cabin-based AI software, whatever the licensing is or whatever the service, if it's an upfront license, we share the economics of that. If it's a monthly service subscription, we share the economics of that. But basically, for the cars that we are part of, that we're developing, the end-to-end service, we will get the benefits of the economics of that for the entire life of the fleet of the car. And so you could imagine what 10 million cars with modern car lifetimes of 10 to 20 years. The economics and the market, the installed opportunity is quite high. Is based on the.
That was loud. Sorry. That was a mistake. Patrick, did you hear that?
Yes, I heard. I mean, they're going to use
incredible TAM, total addressable market opportunity for autonomous vehicle, and software licensing across the board. But go ahead, I cut you off.
Yeah, they're going to use the software to open up these new markets, and it's licensable. So that's another growth aspect of the company. And then he was talking about getting into more into the EV space.
Yeah, and did you hear that type of talk when we did the AMD earnings call review back on February the 6th? Did you hear Lisa Su talk like that?
She talked of that to a bit, not like this.
Definitely not like this. Definitely not. And as we go into some of the fundamental analysis, you'll see what we're talking about. But that was incredible. Now, Patrick, who is best of breed? Who is in this space?
I would say NVIDIA is the best of breed.
Absolutely.
In terms of product and just being able to grow the sales.
Absolutely.
And open new markets.
Yeah, and so as investors, we like to buy best of breed, the leading company in a particular space. We will buy that company stock as an investment. So that was the best of breed. And he mentioned the Omniverse. Would you like to refresh our audience memory what the Omniverse is?
The Omniverse is kind of similar to this metaverse thing. So you can essentially do an avatar and go into these spaces and essentially interact with other avatars. And it's part of the virtual world. But this time it's going to be for business. And it's here. It's not a concept. It's actually here. And a lot of companies have supported it, such as Ericsson, Nokia, and so on and so forth. And that business list continues to grow.
Yep. And so it's essentially creating a digital twin in the internet, right? So
Yes.
Whatever you have physically, you create a digital twin of it and test it out digitally. And if it works digitally, it should work in actuality. That's the Omniverse. But they got that today. So, I mean, what we're talking about is growth. And I know I'm beating you over the head with it. But, okay, here's the last excerpt that I'm going to play from Jensen on a recent earnings call for NVIDIA. Now, he's going to talk about the RTX GPU. Now, are you familiar with the GeForce graphics processing unit and how successful that has been?
Yes, I have it in my computer, and I remember how hard it was to get hold of it.
Yeah. So go ahead.
Because there's nothing like it on the market. I mean, AMD has some good products, but it's not this.
Right. And check this out. Yeah.
Thanks, guys. This is Michael on behalf of Aaron. Can you guys talk about how the launch of the RTX 3050 is going so far, and maybe more broadly, your view of where we are in the Ampere product cycle on gaming? Thanks.
Yeah, thanks, Michael. Let's see. RTX is a unqualified home run. RTX completely reinvented modern computer graphics. It brought forward ray tracing about a decade earlier than anybody thought possible. The combination of RTX with artificial intelligence, which enabled this technology we call DLSS, is able to not only do a ton more computation using our shader processors, but also engage the powerful tensor core processors that we have in our GPUs to generate images, beautiful images. RTX is being adopted by just about every game developer on the planet now. It's being adopted by just about every design tool on the planet now. And if not for RTX, Omniverse wouldn't be possible. We wouldn't be able to do physically based path tracing and simulate sensors like radars and LiDARs and ultrasonics and, of course, cameras and simulate these cameras physically and still be able to deliver the type of performance that we deliver. And so RTX was a game changer for the industry. It reset modern computer graphics, and it was an enabler for us to build an entire new platform called Omniverse. We're about I think about a third of the way through upgrading an installed base that is growing. You know that video games is now the world's largest gaming genre, and Steam over the last 2 years has grown by 50%. The number of concurrent players on Steam has grown tremendously. And just the last couple of years, a brand new game store from Epic came on, and it's already a multi-$100 million business. I think it's close to $1 billion. They're doing incredibly well. I'm so happy to see it. And so the overall gaming market is growing, and it's growing quite nicely. But the thing that in addition to resetting computer graphics for our entire installed base, the growing of our installed base, because gaming is growing, there are a couple of other growth dynamics that are associated with GeForce and RTX that's really quite brand new. One of them is hybrid work. This is a permanent condition, and we now are seeing across the board people who are designers and creators now have to set up essentially a new workstation or new home workstation design studio so that they could do their work at home. In addition, the creative economy, the digital economy, the creative economy is really doing fantastically because everything has to be done in 3D now. Print ads are done in 3D. So 2D print is done in 3D. Video is done in 3D. And live video, broadcast video, the millions of influencers now augment their broadcasts with rich augmented reality and 3D graphics. And so 3D graphics is now not just for video games and 3D content, it's actually used now for all forms of digital content creation. And so RTX has all of these different drivers working behind it, and we're definitely in the early innings of RTX.
Yeah, so that is the CEO of NVIDIA, the founder of NVIDIA himself speaking. So, I mean, I think if you just go back and listen to all of that, there's a really good thesis to buy the stock. But is it a better stock than AMD, Patrick? Let's look at the numbers. Are you prepared to show us some fundamental analysis? Let's do some comparisons between AMD and NVIDIA before we wrap this show up. So, Patrick, I think what you're going to do is go to the $30 a month premium site that we showed you how to get for free on an earlier show.
Yes.
If you want to go back to betoutofdebt.com or just search on YouTube for us, we show you how to get this for free. It costs $30 a month. But, all right, so let's see what Morningstar has to say about NVIDIA and what is NVIDIA's rating at this current stock price. So, Patrick, let me know when you are ready, my friend.
Okay, so right now I'm just going to go to the Morningstar site.
Okay.
And then I'm going to start sharing the screen really quickly here.
Okay, perfect. And then we'll look at the Morningstar rating, and then let's look for NVIDIA, and then let's look at it for AMD as well. And then we'll go through Yahoo, and then we'll go through BarChart.
Okay,
right.
So I am ready.
All right, there you go, Patrick.
So right here, this Morningstar rating has gone up from 2-star to 3-star.
Okay, so that's better. So 5-star is the best price. And for those who may not be familiar with the Morningstar website, it gives you a fair value rating if you're getting a stock expensive or cheaply. So 3-star is respectable. That's right at fair value. So typically near fair value. So that's a good stock price. Let's look at the forward PE there, Patrick. Look at the consensus forward PE for NVIDIA. Right there.
Okay.
In your face, right there. Do you see it?
Yeah.
Right?
Forward PE.
43.29, right there beside
right there.
the.
Yeah, I see it right there.
That's a little expensive. That's a little expensive.
You'd want to see that closer to 30.
Yes, you definitely would like to see that 30 or below. We keep repeating the same thing for our newer investors so that they know how to evaluate a stock. We'd like to see 30 or below in an inflationary environment. Okay, so let's continue down, Patrick, and let's look at what Morningstar says is fair value for NVIDIA.
Okay, so the fair value, they say, is $200 a share. And last close at 241.
Okay,
so
interesting.
According to Morningstar, which is, again, keep in mind this is a very conservative rating. It's a little bit expensive.
It is,
but given what you just heard about the growth prospects of this company, you may want to pay a little bit more than its fair value, because once again, Morningstar is very conservative. And then you look at the economic moat.
Oh, it's very wide.
It's very wide, meaning that it's hard for others to compete with NVIDIA when you see a wide economic moat in its business models, and the capital allocation, meaning how well does it use its capital for R&D and whatnot, is exemplary.
Yeah, that's excellent. That's excellent. They certainly have a proprietary advantage. That's good. Let's keep going down.
Okay, so even though, I mean,
let's go past this. This is confusing. I don't want to confuse our audience.
Right, but the point I just wanted to drive home is that the price of the stock always trades above its fair value. That's all. Okay, so here are the key statistics.
Mostly all. Yeah, we could catch stocks below their fair value, Patrick, on occasions.
But this kind of growth stock, you rarely see it below its fair value.
We'll see what it says about AMD and see if that holds. Okay, so let's look at some of the key statistics.
Okay, so right here you have the profitability here. You always want to see these above 15%.
Right. So you want to see that return on, what is that right there? It's kind of small, but it's return on assets and return on equity.
Equity.
Yeah, those two in particular, we want above 15%, and both of them are 24% and 41%. That's pretty good. So we're passing the test there.
Yes.
Okay.
And then we're going to go down to the statistics here. So this would be the current year. So the current PE ratio is 62.75. So that's kind of like a trailing PE. The forward PE.
That's the one we're interested in. We're very interested in the forward PE.
So the forward PE is 43. So once again, it's a little expensive, like C30. And then here's the PEG ratio, the price per earnings per share divided by the growth. And it looks like, generally speaking, especially in a high inflationary environment, you want to see this below 2. Right now, it's at 3. Right now, it's a little bit over 3. It's like almost 3.2%. 3.2 times, rather.
Yeah, and we're looking at the current column, right? So
we're looking at the current column, which is this here.
Yeah, PEG ratio is 3. That is not cheap. We certainly want that 2 or less. Tech stocks usually are allowed a PEG ratio of 2. Non-tech stocks, usually 1 is where you want to be or less. But tech
Right.
stocks, because they grow so rapidly, 2 and less is a good number. This at 3, still paying a little premium for such a growth company. It may be worth it. We'll take a look at some additional data in a minute. All right, Patrick. So we got that for NVIDIA. Let's compare that to AMD.
Okay, so let me stop sharing and get to the AMD screen. Yeah. All right, are you getting this?
Yes, sir. We're there.
Great. So Advanced Micro Devices is also a 3-star rating. So fairly comparable.
Look at that forward PE.
The
Where
consensus forward PE is around 30. So that's very good.
29.85 to be exact. That's good.
Yes.
That's reasonably priced for a tech stock, 30 or below.
Yes.
Seeing that NVIDIA was at 43, that's pretty good. Okay. Let's keep going, please.
Okay, so now we look at the valuation model here. So the fair value is at 130.
And look where it
right
closed, Patrick. You just said it's
121.
never closes below fair value.
Well, I say it rarely does. I say never.
Yeah. So here's the fact, right? So yeah, AMD is below fair value. It's really a good deal right now, per Morningstar, if you believe what Morningstar has to say. Look at the moat, the economic moat.
Well, they're into a lot of CPUs. They got some good graphics gaming cards, but they're not at the same level of NVIDIA's, although they're catching up to NVIDIA's.
But you see what Morningstar says about the economic moat here.
Because they're competing with Intel.
I'm just saying, look what it says. Can you read it?
Yes, narrow.
Exactly. It's narrow comparatively to NVIDIA, which was wide. And a wide moat means you have a competitive advantage. Your moat.
Yes.
That's good. So they have a narrow, but still a respectable company, a very good company. You know,
Well, the CEO is just amazing. When we did an excerpt on Dr. Lisa Su. So
yeah, February the 6th.
do.
All right, let's continue down, my friend. Let's look at the valuation, the fancy word for how expensive. You're going to look at the key metrics. We're going to hit the key metrics before we get there.
Yeah, so let's take a look at the profitability.
Yep.
So again, you want these above 15%, the profitability. So we got return on assets of 30.
29.58, which is better than the 24% that NVIDIA had. And then return on equity.
It's about 47.5.
Which is better than the 41% that NVIDIA had. So far, we're looking better, Patrick.
Yes. And then, excuse me. We'll go to the current tab.
Yeah.
And again,
29.85%. Can you show the current tab, please? So that we can see
right
it.
here.
And then let's go right into the forward PE. I really do not want to confuse the audience. I really want to go and just talk
the forward PE is 29.85%.
Yep.
29.85 times rather. And then the PEG ratio is at 1.58 times.
So look at the PEG there, 1.5. Much different than 3. Much cheaper, below 2. A lot of good fundamental numbers here, right? So AMD, from a fundamental metrics perspective, looks better. It's cheaper, better return on assets, return on equity, and it has a better PEG ratio. All right, so let's go over to Yahoo and let's take a look at Yahoo, and let's look at the expected growth rate this quarter, next quarter, and 5-year for NVIDIA and AMD, please.
Okay, sure.
So those who follow us a bit knows that we go through this quite a bit, and then we'll open the chat up for those.
Okay, so I'm on Yahoo Finance.
Okay, hold on for a second, Patrick. Let me get you up here. There you go.
So I'm on Yahoo Finance, and then you want to go to analysis for the growth analysis, the growth rates.
Okay, and we'll go to the bottom of the page like we always do on analysis, Yahoo Finance, and let's look at the expected growth rate for these companies.
Okay, so for NVIDIA's next quarter is a little less than 31%.
Look at the current quarter.
Current quarter, 41.8%.
Growth. Ooh.
Yes. Current year is 26.40%. Next year's, for some reason, seems to slow down to about 19.6%, according to consensus. The next 5 years on the average is a little bit more than 30%.
And then over the last 5 years, it's done 52%.
Yeah, almost 53%.
Yep, over the last 5 years. So, excellent growth company. Let's see if AMD has similar numbers. I wrote those numbers down, Patrick, so that we could compare. So if we look at AMD, you see what we're working with there.
Okay, so right here I'm on Advanced Micro Devices from Yahoo Finance. And then again, same tab, weekly analysis. You go to analysis.
Yep.
So you scroll right down to the bottom of the page. Okay, so right here, the current growth, the growth rate for the current quarter is 73.1%.
NVIDIA was 41%, so better. AMD is winning.
Next quarter is 58.7%.
NVIDIA was 26%.
Yes. Current year is 43%.
NVIDIA was 30%.
Next year is 15% for some reason.
Okay.
I think NVIDIA was closer to 20%.
Yeah, maybe.
And then the next 5 years is around 30%. And I forgot what NVIDIA's numbers were for the next 5 years. I think they were like around 35 or 36.
It was 52% over the last 5 years and 30% for the next 5. So they got the same expected over the next 5. So this one is 29.9% for the next 5, and NVIDIA was 30.18 for the next 5. So about equal.
Yes.
So Patrick, what is that telling us, Patrick? What is that telling us, my friend? What can our audience deduce from that?
Well, it seems that in AMD seems to be the better deal, the less risky bet. It might not grow, the stock price might not be as electrifying as, let's say, NVIDIA, but you're going to see some decent growth at a decent price for NVIDIA, for AMD.
AMD is definitely better price right now than NVIDIA. Now, which one we like for future growth? We believe the analysts may have not gotten it all correct on NVIDIA, but AMD is the safer bet right here, Patrick. The numbers show that.
Yes.
All right.
That's what I was saying.
So before we wrap it up, let's look at BarChart. Let's do a comparison of the performance of NVIDIA and AMD. Let's compare the two over the last 10 years, 5 year, and 1 years, and do a comparison of what kind of money you would have made if you invested in these stocks.
Okay. So what I'll do is I'll just go to the share my screen right now. So this is bar chart, and you go to the interactive chart to get to this screen. So right now I'm on a year.
Patrick, let's start out with 10-year, please, because the yearly is confusing with everything that's been going on. So can we start at 10-year, please?
Okay, so we'll start at the 10-year. So right here, the frequency is it's a monthly. And here, over the last 10 years, you've seen a growth of 6,174% for NVIDIA versus 1,400% for AMD.
So
Keep in mind,
are you saying the blue is AMD and the black is NVIDIA?
Yeah, the black is NVIDIA, the blue is AMD.
Sorry, I interrupted you. Go ahead.
What I want to say, though, here is keep in mind that despite the wide discrepancy, around 2014, which is roughly 8 years ago, AMD had a turnaround when Dr. Lisa Su became its new leader. And then 2017, 2018, that turnaround was reflected in the numbers. So you're going to see more impressive growth for AMD in the latter years.
Good point. Very, very good point there. I'm going to move us over a little bit so that the charts can be seen better. Okay.
Yes.
So over the last 10 years, NVIDIA has provided bigger returns, hence higher PE, why people are willing to pay more for the stock.
Okay. It's completely dominated AMD for a 10-year period.
And that was on a monthly frequency. So that was on a monthly frequency on the chart there. All right. So now let's go. I'm going to move us way over here actually, so we can see. Okay. So now let's go 5 years.
So let's go to the 5-year comparison.
We're on what frequency here?
A weekly.
Okay, so weekly frequency over a 5-year period. We're going to look at the performance. So here,
you're looking at in the black NVIDIA, in the blue AMD, in the black, so that's 874% for NVIDIA, 770% for AMD.
Okay, and then let's go with a 1 year.
Okay, so here you're looking at the 1 year daily frequency.
And Patrick, can we see the bottom axis too? Can you show the bottom axis as well, please? Thank you.
Yes. Yes. So right around here is where, the price of stocks of these stocks were high, were at its high. So here, I think NVIDIA was around 340 something odd dollars a share, and AMD was getting close to about 170 or so a share. And then right here, you've had the inflation scares, and then of course the uncertainty and the war in Ukraine has pretty much knocked the price of the stock down considerably. Right now, AMD is trading at about $121 a share, and NVIDIA is trading at around $241 a share. So, unfortunately, because of this uncertainty around inflation and geopolitical tensions, you've seen over a 1 year period a reduction of 20 or so percent for NVIDIA. So basically, if you had $1,000 invested, you'd have about $800 today.
All right. So yeah, consistent. The black and the blue, and NVIDIA is consistently winning.
And then AMD, you would have about less than half.
Yep. So pay a little more for NVIDIA, better performance over time. So if one were to do a stock option here, Patrick, what would you do here in closing?
If one were to do a stock option, for me, what I would do is I would probably buy a Leap, since there's been significant upgrades on AMD. AMD is trading at around 120, so I would do a Leap on the maybe about a 120. I mean, I'd have to go to the puts and the calls right here. Then when we do that?
You want to do that? Okay, if you want to do that, we can do that very quickly. For those who are interested in the options game, I certainly would do a couple of things here. We would have to be very careful because implied volatility is very high. So you would have to consider that. Not sure in this environment what I would be doing. Certainly would not want to be selling puts with the volatility as crazy as it is right now. So I would chill until the volatility slow down a little bit, but I'm interested to see what you had to say.
Okay, so let me go to AMD.
And Patrick, if you can pull AMD on BarChart.com, let's go look at the implied volatility for NVIDIA or AMD for those who want to do an option trade. I would say the implied volatility is probably so crazy that buying a call would be, in this environment, a little dangerous unless you're going to cover a spread. And then if you're going to do a leap that far out, you probably want to do a diagonal, I'm trying to say, over kind of like a long range spread, right? So
yes. So essentially, you'd want to do like a poor man's covered call.
Yeah. So yeah. So Patrick, it's taking you a while to bring it up. Maybe that description was enough, but I'm interested in seeing the implied volatility for NVIDIA but you're not pulling it up on the screen. You want me to pull it up?
1 second. Yeah, why don't you pull it up?
Yeah, I could pull it up quickly. We might cut this portion from the broadcast because we're running a little over, but let's have a little fun. And let's look at those who will want to do an option trade, because we do have a few traders out there that want to live the fast life.
Exactly.
Let me do the fast life out here. And so here's what I would do, Patrick. And let's blow this up if we're going to live the fast life. Okay, so first of all, the first thing I would do is I'll pull NVIDIA, type NVDA in here to get to this. I would do price overview, and first thing I'm interested in is the implied volatility, because the implied volatility tells you how expensively are you buying an option contract. And the option contract, you want it to be the implied volatility below 30%, right? 30% or below. So I would go and look at the IV rank. And so looking at the IV rank right here, it is 48.54%. So that would tell me, no, I don't want to buy a call. I don't. That implied volatility is too high. The percentile is 85. The rank is 48. So that would tell me I want to sell. I want to sell a put. But would I sell a put in this environment? Probably not. Even though the IV rank is high, NVIDIA is too volatile right now. It's going up and down, up and down, up and down, unless you want to own the stock. So I would refrain from doing anything right now until volatility has gone down a bit. Now let's look at AMD. I wouldn't even do a leap in this environment. It's too expensive to buy a call. So same difference. I put in AMD here. Got applied advanced micro devices. Again, I'm at price overview. I will go down here. I will look at the implied volatility. The IV rank in particular. Look at the IV rank, Patrick.
Yeah, it's high.
It's high. Would I buy in this environment? No. Would I sell a put normally? Yes, but under terms where it's not so volatile. I don't want this stuff put to me unless I want to own the stock. If I want to own the stock, then I would do a put probably at a delta, at 15 delta. And what does that mean? And how would you determine that? Well, what you would do is go here, option volatility Greeks, click on that. I would go out. How far would I go out here? AMD is scheduled to pick up on the second half of the year, right, Patrick? And NVIDIA. So I
usually like to do a 770 delta.
Yeah, it's too volatile for me right now. So I would go out a bit. I would just take some risks here. I would go out to January. Now, this is more risk, Patrick. It's a lot more risk. As a matter of fact, maybe I would not go that far. Maybe I would go out about right past earnings. I think AMD is going to do well. Go out past earnings. And then I would look at the delta here. And I would pick, you would pick the 20 delta. I wouldn't. I would pick the 16.
Yeah, I'd pick the 70.
Yeah, I would pick this delta right here, the 170. And so I would sell this. I would sell a spread.
Oh, so
I would sell the 170, 160 spread. That's what I would do. But and then if it looks like I was gonna get in the money, then I would roll it out all the way out to probably much further out, maybe even closer to January. But dangerous time for option trading right now. Implied volatility is too high, so I would refrain until implied volatility falls a bit. I hope that helped our audience members who are interested in options in these two particular stocks. There are other stocks out there that you could buy calls and sell puts that are not as volatile, and you probably can make some short-term money. So
yes, you can.
All right, Patrick. So that is a Bet Out of Debt show today. We call this show the Bet Out of Debt show because when you place a trade, it's called placing a bet, which is a metaphor for investing. And hopefully it's a win-win to keep you out of debt. And as always, keep investing. And we will see you next week with the owners of Black Coffee Northwest. Take care and goodbye.